the side. So, however, the one, like as you said, the one from your employment is straightforward, just the T4, right? But the one from your self-employment, how to calculate that is it's very easy. Like if you're in business to make profits, right? So you're already making profit. Like let's say you're selling pens, for example, you're buying it for $5 and you're selling it for $7. So you just do your calculation. Like this is my cost. This is everything that has to do with my costs. And this is how I'm selling it. So this is my revenue. This is my cost, then this is my profit. So I'll now bring that $2. So let's say I sold 20,000 pens in the year. So that means I have $40,000 gain from that self-employment, right? So I'm going to bring that 40,000 from that, my business on the side, to the income from my basic employment, and then file the taxes together. However, it's not that complicated as you think, because as a self-employed person, you have a lot of deductions that you can remove from your expenses. So many things. So like home office deductions, if you're working from home, which you may not be able to deduct from your salaried employment if you're not working from home, right? If you have a salaried job that your employer requires you to work from home, you can also claim the home office deduction, but the employer must give you the T2200 form, right? So, but let's not talk about that. So in your personal business now, you have a lot of things to claim. Like you could even claim, if you're using your car for your business, for example, the mileage, the gas that you're buying inside your car to fuel your car for your business, as long as, so the CRA just wants you to be reasonable in claiming these expenses. Okay. So reasonability is the key word. So if you're reasonable, like as long as you're telling this, as long as you're showing the CRA that, yeah, it's reasonable. Like, for example, Uber driver, I've seen Uber drivers come and they will say, I want to claim this, like ridiculous things that does not apply to you as an Uber driver. So, yeah, okay, I get you. So if you're going to, like the CRA will say, if you're claiming home deductions like your bill, your electricity, or maybe electricity, yes, they will allow you to claim a certain percentage of that if you can prove that you're working from home. But if you now want to prove that, okay, 100% of my internet bill, for example, is it has to go to my business, then the CRA is going to say no. It doesn't make sense. Because you need internet in your house. So one guy, let me give you an example. So one guy came to me and said, no, this phone bill is exclusively for my business because I didn't have a phone before I started my business, which could be true, right? He didn't have a cell phone. However, when we look, he had a land phone, which he gave up when he was starting his business. So you even though you got the cell phone when you started your business, you thought it was going to be exclusive, but you gave up your land phone at home. So what are you now using for communication? Yeah, in your personal life. So the CRA is going to say, no, you can't claim 100%, but there's a certain percentage that you should be allowed to claim.
Okay. Let's go into that, because I think I read up that the percentage of, if you're working from home, the percentage of your expenses should be about 20%. So that 80% is what you for the home, but 20% of those bills should go for the business. Is that correct? I think I saw it somewhere. Like if you're using one phone, so how will you separate it? So what percentage would you allocate for the business, and then what percentage would you allocate for your home expenses?
Okay. So there's a clear-cut instruction that we are on that. So let's say your house is 5,000 square feet house. And the room in your house that you've allocated for your business is, for ease of math, let's just say it's 500 square foot. So that's like 1/10. Okay. 1/10 of the whole house. So it just means that 1/10 of every bill is going to be allocated to your business. It's very simple.
Okay.
So yeah, you can't just use a blank rule and say we're going to be taking 20% of everything. No, it depends on what really goes into the business. But for some bills, you will be able to claim them 100% if they actually you use them only exclusively for the business. So you will be able to claim them if you claim that you're using, like, for example, I have cell phones, I don't have home phone, but if my job requires me to have a home phone or land phone, well, I see no reason why I should divide that into business and personal use. That's 100% for my business use. Do you know what I mean?
Okay, perfect. So yes, I get you. Yeah, so that means, because it explains it now, so it's not really that difficult to file your tax as a self-employed individual. You're going to file it under the personal income tax, and then and that's, let's go back. So that's why you need to have your numbers very good. You must have your expenses, you must have your income, you must have your revenue and your profit. Have everything in a spreadsheet or somewhere, or work with an accountant, so that when you're ready to file your taxes, you have all the numbers there, and then you file your taxes, and then you can claim your expenses. And that is why I'm bringing you up, and also the money redefined, because a lot of people are confused. How do I do this? So the first thing to do is, once your business is registered, you need to have your numbers. Get an accountant or get an Excel spreadsheet that, most of the spreadsheets are really self-explanatory. They're going to just put your numbers, and then it calculates everything for you. You can get some accounting software. Some of them are free, like Wave or QuickBooks. They're going to help you to get your numbers in place. So when you're ready to file your taxes, you either go to an accountant or a tax consultant with the numbers, and then they'll file your tax for you. So it is really easy, guys. Thank you everyone for joining. It's really easy to file your taxes, because that is what is stopping people from business, from growing. Because, like, I'm working from home, I'm only cooking, I only cook and deliver to my friend, I only cook and deliver to my colleagues, you know what I mean? But if you want to grow, actually, if you want to expand your business, you need to start the right way. Register it, get your numbers in place, file your taxes, then you can go ahead to apply for funding, for help, and expand. So let's go to the next business. Now, what is GST and HST? Do I need the GST number? Because I hear that a lot for businesses.
Okay, so GST is a federal tax. It is, the full meaning is just goods and services tax. That's the GST. So it's like, I hear some people say value added tax. Well, some countries like in Nigeria and some other European countries, they call it value added tax. But the GST is the value added tax of Canada. So if you are selling taxable supplies, we have some that are zero rated, we have some that are exempted. As long as what you're doing, the government says charge tax on this, then that becomes a taxable supply. So GST.
Can you give an example of taxable items?
Yes. So almost everything you have to charge, almost everything, except for some particular items that are exempted and some that are zero rated. So exemptions will be, for example, prescription drugs. You will notice that if you go and get your prescription drugs, you don't get charged HSCG. Or if you're a charity organization, you don't have to charge HST. If you're in the daycare business, you don't have to. If you're selling like basic groceries like milk, pineapple, basic groceries, so processed foods, yes, you will have to pay HST or GST. So now let me explain. So, well, I've talked about the federal part, which is the GST. Now, some provinces now have their own GST, which is called PST, which is provincial sales tax. So not all provinces have it. I'm sure Alberta doesn't have it. Alberta only charges the 5%.
No, we don't have
yes,
it.
Alberta only charges, which is why I should move to Alberta right now.
Yeah,
Ontario, and so the PST here is 8%, but here in Ontario we don't call it PST GST. It's just all harmonized together, and it's called harmonized sales tax. So it's now that 8% plus the federal portion of 5%, and it makes 13%. So if you're doing business,
wow,
I know, right? I know. Yeah, I am moving to Alberta. Trust me.
Okay. So thank you for that explanation. So let me quickly break it down, everybody. So the GST is the goods and services tax, and then the HST is the harmonized services tax, which basically is taken in Ontario. So in Ontario region, in that province, is it Ontario? Yes, in that province.
Not only in Ontario, some provinces too charge the HST. You just have to know which one applies. Oh, British Columbia. I think so. So you just have to go to the province that you be.
To your province. Okay, perfect. And so now let's break it down. So depending on your province, once you're running the business, depending on your province, you need to figure out if you're going to get charged the HST and the GST. Now for those in Alberta, you only charge GST, which is really good, which is just 5%. That is good. So for each product you sell, you actually take the GST, and then you have to remit it to the government. So how do you file taxes for that?
Yes, that's the way it is. So now, not everybody has to register for GST. Not every business.
Okay.
So people be like, when do I have to? The CRA says they give two rules. Like first, if you're making taxable supplies or services, then you should register. Number two, if you're not a small supplier. So you would be viewed as a small supplier if your revenue for the year is not up to $30,000. So if you're a small business and maybe your revenue is just maybe $20,000 a year, and then you may not. It's not compulsory. Like some people may want to voluntarily register, but there is no. As long as your revenue is not up to 30,000, you're not required to register, but you can decide to register, maybe for some reasons known to you, maybe for you want your business to have that look that, you know, this is a very good business here, that some people may not want to transact business with you if you don't have that HST number. You have to be careful because now you will be required, when you register, you will now be required to be charging that 13% on top of your price.
Of your business. So it increases the cost of your item.
So I would rather buy something from somebody who sells it $10 than $11.30. So you may want to rethink that. But if you think that the cost and benefit of registering is better for you, well, by all means. So that's why you need to sit down with somebody, and then they look at the holistic, everything that, you know, what you stand to gain, what you stand to lose by registering. Because if you voluntarily register, you have to remain registered for 1 year. So yeah, you can register and be like 3 months down the road and be like, you know what, peace out, I'm not doing this anymore. No. So you have to be there.
That is true. So because for someone that is just Okay, so for someone that's just starting, okay, I'm running my business from home. Probably I do retail. I sell like African and inspired, clothing, or I cook from home, or an event, decor or makeup artist or hairstylist. Do you advise them to start with that, or just keep running your business till you have like a huge client base? Then you can move to the next level of maybe to register your business, open a bank account, and then get the GST numbers. What do you advise?
Okay, generally, I advise people to register their business. So registering a business is different from registering for GST or HST. You can register your business that's making, say, $5,000 a month. You can register that and not still register as an HST collector. So that way.
But do you have to fight her?
You do, yes, you do have to. But remember, you're not making a lot of money. You have a lot of benefit or a lot of deductions to claim. Like you said, they're working from home. That alone gives them the ability to claim the home office, deductions. So yeah, register, by all means, register your business, because it will give you that very good professional look. And people will trust you more that your business is registered. Then you will have that peace of mind, that confidence also that, if the government asks you anything tomorrow, yeah, this is my business number, I'm registered. So it's not like an illegal business, kind of. You do not have to register, remember, as long as you don't have to. There's no rule that says your business must be registered. But there are so many advantages to registering your business that I would advise you, by all means, register your business. But as per the HST, hold on that if you're just starting out.
Until you make 20,000 and above.
Yeah, so if you're somebody who is trying to compete with pricing, for example, you're trying to penetrate into the market and pricing is something that you're still working on, and you won't gain the competitive advantage by adding another 13% on top of that. You know what I mean? So I don't see the benefit in registering for GST or HST immediately you're starting your business, especially if you're not making up to 30,000 and you're not required to. But every business is different. Every business is different. Your type of business, may be different. That's why you need to consult somebody, or you call CRA. If you're not, you can call them. You can consult with an expert. You can call, accountants and lawyers. Ask them.
That's why we have you here. So if you sorry to cut you short, that is why we have you here. So hi everyone, thank you everyone for joining. Ajoke, the real estate, Honey Mix, everyone, Vivi, Rufi,
thank you everybody.
Bayo, thank you everyone for joining. So I'm just going to do a quick recap. So if you're running your business from home, you can actually file your tax when you have your numbers separate. Now, I just want to ask, is it required to open a separate business account for the business, so you can have like separate income and when you're filing your tax?
It is advisable. So I was talking about bookkeeping. So bookkeeping, what I see when small businesses come to file their taxes every day is that their bookkeeping is all over the place. Like, some people will even bring like a bag full of invoices and they'll be like, wow, this is my invoice. Like, what? So you're not doing no bookkeeping. So one step ahead, like, it's not even hard to open a business account. You can get one for as low as $5 a month, So open a business account so that you keep all your transactions for your business separate. Like, somebody's asking, okay, how much do I pay for this? Just send them your email, wire the money to my account, and it goes to the business account. So it's easy. You can just ask your bank for your statements. If you're in doubt of how much did I collect this month, you can go online. Almost all the banks are online now. Just So it's easy bookkeeping when you do that. And also, it's an advantage for you with the bank also when you're ready to maybe take your business up to a next level, maybe, you know,
yes. Yeah, we want finance and
yeah,
loans.
something that you're just doing, like modeling up with your personal banking thing. It's not gonna be well structured and regulated. So